Hi everyone, it's our finale with RMI once again. Hope you guys have had a fantastic week. So today I know in the news there's been lots of information about fraud and how businesses can get attacked from different ways on fraud. So I want to touch on a topic that can help prevent some of it. And this is specifically called segregation of duties. So when we're looking at segregation of duties from an accounting standpoint, we're talking about the potential to avoid internal fraud from your organization. And there's three key elements to this. So the first one is record keeping, the second is access to assets, and the third is authorization. So I'll touch on each of those a little bit. So when we're talking about record keeping, we're talking about the access to the books, who's actually making the entries, who's actually doing the bookkeeping, the day-to-day bookkeeping for an organization. When we're talking about authorization, we're simply talking about who's authorized to do a transaction, who can either sign off on the checks, who can sign off to approve a payable, who can actually make an order when we're talking about dealing with suppliers. And then the last one is access to assets, and that's very simple. Who can actually access the bank account, right? Who can actually access the physical inventory? When we're talking from those different elements, if we can keep somebody different on each of those pieces, it will help eliminate the ability for fraud in the organization. So once again, the three key points is record keeping or your day-to-day bookkeeping, access to assets, and then who has the authorization to do transactions. Once again, it's our finale with RMI, and I hope you have a fantastic week.